Hello, everybody, and welcome to today's webinar on Chinese money laundering networks. My name is Danny McGlynn, and I'll be your moderator for today's session. I'm the President and Chief Integrity Officer at the Institute for Financial Integrity. IFI's mission is to protect the financial system from use by illicit actors and to combat threats to collective security through cutting-edge research, education, and training. It's great to see so many participants joining from around the world today. So good morning, good afternoon, and good evening, depending on where you are. We appreciate you taking the time out of your busy schedules to be part of this important discussion, and we hope you take away some valuable information and insights. Before we begin, let me quickly go over a few housekeeping items. Today's webinar is being recorded, and we'll share the link with you after in case you missed or want to revisit something or share it with colleagues. Please feel free to submit questions throughout the session using the Q&A tab on your screen. We'll try to address as many questions as time permits during the Q&A segment at the end. Thank you to those who submitted questions ahead of time. We've already worked some of them into the discussion, and we'll cover as many as possible. Finally, you'll notice that there's an area for documents on the right, which includes resources related to topics that you may want to check out related to today's discussion. And without further ado, let me introduce our all-star panelists. Brian Ludlow is a money laundering subject matter expert with the United Kingdom's Financial Intelligence Unit at the National Crime Agency. He's the coordinator of the Expert Laundering Evidence Team, which provides expert evidence to courts and investigative training and assistance for financial investigations. Brian has over 35 years of law enforcement experience, including more than 25 years investigating and researching money laundering. In addition to the NCA, he's worked for His Majesty's Customs and Excise, His Majesty's Revenue and Customs, and the Serious Organized Crime Agency. His expertise includes laundering through informal value transfer systems such as Hawala and Chinese underground banking, trade-based money laundering, and criminal cash smuggling. And coolest of all, just this past June, Brian was awarded a Member of Order of the British Empire in the King's Birthday Honors List for his services to law enforcement. So congrats, Brian. Catherine Woods is an Associate Managing Director here at the Institute for Financial Integrity. She is IFI's subject matter lead on cartels, Chinese money laundering networks, illicit procurement networks, and emerging technologies such as digital assets. Catherine's career includes more than 15 years in senior and specialist positions in global banks and fintech startups in Australia, London, and Hong Kong. She was a financial intelligence and investigations senior analyst at HSBC Bank, led public-private partnerships and outreach programs at Standard Chartered Bank, and represented financial services at the UK's Joint Money Laundering Intelligence Task Force, or GIMLET, a world-leading public-private intelligence sharing partnership. Prior to IFI, Catherine was the co-founder's first hire and head of client onboarding at a crypto fintech. She's been a speaker on counter money laundering at Interpol in Lyon, France, and on terrorism financing at the National War College in Washington, D.C. She has also published articles by the Modern War Institute at West Point and Royal United Services Institute. And soon, we'll have an article featured in the American Bankers Association Risk and Compliance magazine on terrorist cartels and money laundering methods. Okay, before we jump into the discussion, I want to just take a minute to set the stage with some high-level context for today's topic. In its most recent National Money Laundering Risk Assessment, the Treasury Department assessed that Chinese money laundering networks are one of the most significant money laundering threat actors facing the U.S. financial system. And law enforcement has reported that they've become more prevalent and are now one of the key actors for laundering money professionally in the United States for drug cartels and around the globe for other criminal organizations. And not to be outdone, in its 2025 National Strategic Assessment of Serious and Organized Crime, NCA assessed that it's likely that the threat relating to money laundering by Chinese-speaking organized crime groups in the UK, which is already one of the highest money laundering risks, has been increasing. Therefore, it's no surprise that this has recently been one of the top priorities for investigators, analysts, and regulatory authorities on both sides of the pond and beyond. And by extension, it's been a key focus area for financial institutions, which, as we all know, play an important role in identifying and sharing lead information to assist law enforcement. Brian and Catherine are going to talk about this more later, but for now, let's kick things off by discussing the global scale of Chinese money laundering networks. Catherine and Brian, can you give us a sense of the scale of these networks and what sort of threat it presents to economies? Catherine, why don't you start off and then hand it over to Brian?
Yeah, absolutely. So looking at the global scale, around 2 to 5% of global GDP is estimated to be laundered through the financial system, according to the United Nations. And in countries like Australia and the United States, the estimates are that 10 to 20% of cash is actually used by criminals or in tax evasion. Focusing now on the topics for this specific webinar, Chinese capital flight is estimated at $506 billion a year. And what this means is that there is a restriction, it's around $50,000 on moving funds out of China, but people want to move more than that. So some of the drivers for that desire to move money out of China are political uncertainty, like military buildup, crackdowns on private enterprise, desire to fund tuition and living costs for their children who are studying overseas, and also for investment in real estate or other assets, with a potential interest in relocating to those countries themselves in future. So those are the drivers on the China side of capital flight. Now we think about the other side of this equation, specifically for the United States, which is cartels. Cartels have large volumes of cash from drug sales like fentanyl, as well as from other illicit activities. And they want to launder that and move that value back to countries like Mexico, where the cartels are operating, but it equally applies to other countries as well. So as an indication on the scale of that, $1.4 billion in suspicious transactions were reported by financial institutions in the United States in 2024. And those are just the ones that were associated with fentanyl. Looking at another measure, the Drug Enforcement Administration, the DEA, seized $2.2 billion in US currency and $2.5 billion in crypto assets over the period 2020 to 2024. So operating at a really large scale and really large financial volumes.
Excellent. Thank you for that, Catherine. Brian, do you want to add to it? Maybe thinking about the UK, Europe, and beyond?
Yeah. Obviously, these money laundering networks are huge. They've got the ability to move billions throughout the globe. To give you a bit of understanding of why sort of things that Catherine's mentioned are so important, is that if you talk about capital flight, people might be thinking, so what happens? So who cares if people want to bring money out of China and invest in the US and in Europe? Well, the thing is, when they move these monies in capital flight, the people that they turn to settle these remittances is organized crime. So your cartels, that's the people who've got the narco dollars. Those dollars are needed in order to settle the inward remittances. So if that figure of 506 billion is anywhere near accurate, you can imagine that's 506 billion, which is going to be obtained of drugs and other criminal monies. So that's the significance of it. These allow organized crime to work. And of course, because there's the big demand for these criminal proceeds in order to settle these inward remittances, it means that they offer very cheap rates for laundering. The DEA have said that some of the Chinese groups have agreed to launder for nothing because they can make more money moving people's money from China, and they just need the monies to settle. We've seen equally in the UK, they regularly undercut all of the other launderers. So anything, and that could really be seen in COVID. When COVID, we basically lost a lot of the underground banking because the workers went home And what that meant was the other laundering groups could put their prices up by 2%. So that is a key sort of aspect. It's just the size and the scale of this and the links between organized crime and then these groups which can move this value across the globe. Another thing to bear in mind as well is the tax that's being attacked. In the UK, we are being severely attacked because not only I'll be mentioning later on something called DIGO. Now, criminal DIGO is still under assessment, but the scale of it is massive, not only in the UK, but throughout Europe. And we think our economies are losing significant sums because these underground bankers are basically managing to feed the DIGO, who are not only using criminal proceeds to buy goods, they're also using it to reclaim tax against our system. So these are really, really important. And also these criminal proceeds which go towards investment, these help put the house prices up and the property prices up significantly. So you've got criminal monies causing inflationary pressures on the US, on the UK, on the European economies.
Thanks, Brian. That's helpful and some indirect costs I wouldn't have normally thought about, and definitely puts it into context, the comments on the scale of these networks. Why don't we next turn to some of the methodologies? So Catherine, can you tell us more about some of the most significant methodologies used by these Chinese money laundering networks and the close connection with cartels seeking to launder money proceeds of drug trafficking and other crimes?
Yeah, absolutely. So we touched on earlier the supply and demand side of things. So the capital flight from China and the desire to acquire financial resources in the United States, and cartels having large volumes of cash, which they need to launder. Before we get into mirror transfers, what's really important to recognize is that what we're talking about here are the criminal networks. We're not talking about the people of China or the people of Mexico or countries where these networks operate. These are criminal networks. They are moving the proceeds of crime, of trafficking, of fraud, and of other types of exploitation. And the people in these countries are being disadvantaged by that. The violence that gets brought into these countries, the corruption, funds that should be being used for public programs are being diverted for individual benefit. So what we're focusing on here are the criminal networks, not the populations and the people in these countries. One of the most significant methodologies that has become apparent in recent years are mirror transfers. And these are matching that supply and demand between the Chinese money laundering networks, the exit of capital, and cartels. It's worth mentioning not all of that $516 billion comes to the United States. So we'll just talk through the methodology on how this works. We're going to start on the right-hand side of the diagram, and we're going to switch back and forth as we go through the steps. Starting on the right, money mules, who are often Chinese nationals. They can include students or lower paid workers. They receive large volumes of cash from cartels. That cash is paid into ATMs, into accounts that are controlled by the money laundering network brokers. On the other side, a Chinese national wants funds in the United States and negotiates with the broker to purchase the US dollars. What they do is they deposit RMB into a bank account in China. The brokers coordinate using encrypted apps like WeChat to confirm that the deposit has been made. And then the broker releases US dollars to the Chinese national or their nominated beneficiary in the United States. That's used for paying tuition fees, living costs, investment, all the other purposes that we've spoken about. So far, the value has moved from the United States to China, but the US dollars have stayed in the United States. So now the cartels value, the funds are in bank accounts in China. So what happens next? Chinese manufacturers are the world's largest suppliers of precursors, the precursor chemicals and other equipment to manufacture fentanyl and other illicit substances. And they are also the suppliers of consumer and other goods, like legitimate goods. So the RMB in the bank accounts in China is used to purchase fentanyl precursors, as an example, and consumer goods. These get shipped to Mexico. The precursors are used to manufacture more narcotics, which are trafficked into the United States for sale, generating revenue for the cartel and continuing this cycle that we've spoken about. The consumer goods get sold at a profit, as a further source of revenue. And this is an example of trade-based money laundering. So the implications of this are the value from the narcotic sales in the United States has been moved first to China using a mirror transfer and then to Mexico in the form of trade. But the US dollars stay in the United States, the RMB stay in China, and the pesos stay in Mexico. So there's no cross-border wire transfers involved in this, and that reduces the risk of detection either by financial institutions or by government investigators. The corresponding movements on either side are difficult to connect because there isn't a transaction between the originator and beneficiary. The link is a WeChat message instead. And this is just one method. So laundering also occurs using trade-based money laundering, multiple different methods, different types of smuggling, shell and front companies, movements of bulk cash and crypto, and multiple different combinations of these as well. So we're focusing in on mirror transfers because they are an especially attractive and especially effective way of laundering. So firstly, price. If a professional launderer or any launderer is laundering money, they will charge a commission or a fee as a percentage of the amount that's laundered. So cartel laundering was typically around 10%. Laundering by a Chinese money laundering network, 0.5% to 2%, maybe even less. As Brian has mentioned, sometimes that is done at no cost because the Chinese money laundering network is not just charging the cartel to launder, they're charging the Chinese individuals a commission as well. So they have two opportunities to charge that commission, and they need the supply of US dollars or other Western currencies that cartels can provide. So they'll charge a low fee to the cartel supplier and higher fees to the Chinese nationals. But what this represents is an increase in profitability for the cartel of, say 8%, the difference between 10% cartel laundering and 2% Chinese money laundering network. Commercial business would find an increase of profitability of 8% just by changing a supplier to be a really successful initiative. But because these are criminal networks, what this means is those extra funds can be used to buy equipment to manufacture more narcotics, to buy weapons, and to accelerate that cycle of violence and harm and criminality. Chinese money laundering networks are also fast. Trade-based money laundering, for example, is very slow in comparison. It takes a long time for the laundered funds to get back to the cartel. Bulk cash smuggling has higher costs. It can be stolen or seized, and there may be a need to bribe officials as well. So while all of these methods are being used, mirror transfers are especially attractive for the cost and speed. Sometimes a guarantee is also offered by the money laundering network that the funds will arrive. So this is a very appealing money laundering method. This hopefully answers a question that we had from Alex from a bank in Australia, who raised that question during registration. His question was about capital controls and some of the ways that money can be moved from China to other countries. So hopefully this answers your question that you asked, Alex. The focus of that previous discussion is about how Chinese money laundering networks operate, focusing on cartel activity, which is, and the United States example. But the similar characteristics mean that these networks operate in other countries as well. So what the kind of environmental conditions that lead to that are countries which are economically stable. So that means they're good for investment. They are attractive destinations for families like students, or maybe for those Chinese nationals to live themselves later. And there are another group of countries that are associated with this because they're closely linked with cartel activity. So we have a couple of different ways that these networks intersect with different countries. I think Brian is probably going to be able to speak on that in more detail.
Is that Brian's cue? In which case, yeah, so Brian, looking globally, let's talk about the reach of these Chinese money laundering networks. How do they intersect with criminal organizations and state-based illicit activity in multiple countries? And are you seeing some of the same methodologies that Catherine laid out, and are there others?
Yes, so when I finally get around to my slide, which I think is coming up next, we'll be covering some of the methodologies and some of the things we see, but trade, mirror movements, they're all the same. But these networks are very much global in nature. I think the Antarctic's the only place where you won't have these groups. The Chinese diaspora has moved throughout the world, and when they move, so do their criminals, unfortunately. And the criminals bring their money launderers, and these not only deal with remittances for the diaspora, because they make money on very fine margins. Criminals are perfect for this because they can make they move money in bulk. So that's where they can come into their own and get the monies. And of course, with any money launderer, they don't care. They never ask where it comes from. They don't care if it's terrorist financing. They don't care if it's dealers of death who are bringing drugs into the country. All they're interested in is getting the volume, getting their money, and getting their cut, and that's all it is. So these questions about so they don't mind whether it's sanctions evasion, whether it's drug money. They'll just move it because what's important to them is the money. So here is a slide. I've been reliably informed that those on this webinar can actually expand it. So hopefully they'll be able to see it a little bit better, and you'll get a better view of it than maybe perhaps I have. But what this is if you look over on the right hand side, we've got an international controller who is based in China. So he's on the far right hand side. Now he is central to this. He has got the ability to settle the movements of hundreds of millions, if not billions of dollars globally. And that's what these people successfully do. So if we to give you an idea of the size of scale, I'm more familiar with people over the north of the States, over in Canada, than I am so much in the United States. But in Canada, I've definitely seen these controllers impacting, moving millions of dollars of value from the States, from Canada into China and back again. And equally, this often involves routes through the States as well. And if any of you look up the Vancouver model, or the Vancouver problem, as it's called, it's often said it's basically laundering through gambling. It's a Chinese money laundering network moving value from China into the US, into Canada and the US. So basically, if you look up the Cullen Commission, you will see all the evidence that's been brought into that, and there are a number of bits around these Chinese money laundering networks. But if we look at the chart, if we go to the top left, which is the United Kingdom, what we have is a criminal. Now that criminal basically has a property out in Brazil, which is over in the right-hand side, top right. Now he needs to sell that property because he needs those funds back in the United Kingdom. So he sells the property and the money ends up in a bank account in Brazil, but it's no good to him in Brazil. He needs it in cash in the UK because he owes that money to another criminal who wants the debt repaid. So he contacts the controller in China. The controller tells him to send that money to a shell company, which has a bank account in Hong Kong, which he does. Once that money has arrived and the controller verifies that the monies are in place, he then gets in touch with what we call a collector. Collector's more than just a mere courier. Collector is the personal representative of the controller in the region they operate, and they not only collect cash, but they account for it and then they pass it on as directed. So this collector, who's in the United Kingdom, takes cash from a cash pool. And when I talk about a cash pool, it can be cash, it can be money in a bank account, it can be casino chips, it can be gold, it can be anything that somebody else wants. And he then passes, say, $150,000 worth of currency over to this criminal. This criminal can then pay off his debt and hand it to the other criminal. Now, the reason why that criminal wants that money, he wants to buy his next drug deal from Holland. So he gets in touch with so So he wants to buy his next lot of drugs. Again, he goes through the Chinese controller. So the Chinese controller basically arranges for his collector to meet him, and they collect $150,000. I've got 150,000 as a common thing just to keep things nice and simple in this chart. So the 150,000 is handed over, it's counted. You then get in touch with the controller and say, yes, I've got the money. At which point he arranges for his Dutch controller, his Dutch collector, sorry, to basically hand over $150,000 to the Dutch criminal. So what's happened here is not a single penny has crossed the border, not a single penny has hit a bank account, but we've got an international transaction, which means that the value was moved and then the drugs are on its way. So that's just simple value, mirror trading, value transfer. Now, if we look over to the bottom middle part, what we've got is we've got a French company. Now, that French company wants to buy £160,000 worth of goods from a Chinese company. Now, however, they don't want to pay £160,000 worth of taxes and duties on that money. So they agree with the Chinese manufacturer to be invoiced for $10,000. And so they send over the invoice for $10,000. The telegraphic transfer goes, and that's what you see in your banking system. But the goods actually do cost $160,000. So they go through a controller, probably through an intermediary. And what they'll do is they'll arrange for $150,000 to be sent, and in this case, it's sent to a Dutch company bank account. So we'll have so once that's arrived in the bank account, the controller then arranges for the $150,000 which he's got in his shell company account in Hong Kong to basically go into the Chinese account. So we've now got the $160,000 paid. But all that's really seen in between France and China is a movement of $10,000. So you've got your duties getting paid on that. You've got your sales tax, your value-added tax in France getting paid on that. So if you can put that in the context of tariffs and put that in the context of duties, these networks can help get around that very easily. And these are actually things that we see in Europe. So my colleagues in Belgium, my colleagues in France have all seen this money's being devalued for well under 10% of the true value of the goods. So, and there's plenty of press reporting as well about Chinese companies liking to receive these third-party payments because they can keep these third-party payments out of the records, out of the returns and out of the bureaucracy that they have to go through. So it cuts their own overheads and they can compete more competitively on the world market. So it's not only Chinese groups that facilitate this. We see them with other money laundering groups. They do it something similar. They buy these trades from Chinese companies, which obviously seem to be through Chinese money laundering networks. And then they use criminal monies to settle that. In the UK, we've seen billions moving over there. And the last time I searched premises connected with an Afghan money laundering network, it was all for goods, buying goods from China. So that was UK drugs money going to pay for Chinese goods for delivery to other places in the world. So you can see again how trade gets used and moved in relation to that. So, but a lot of the things that we see is, so for example, in the UK, we've got we get a lot of Chinese students every year studying in the UK. It's something the UK welcomes. It's very lucrative for us. We have somewhere between 140 and 160,000 Chinese students studying in our universities. They can move monies through the normal banking system. However, there is potentially the $50,000 limit, but also the underground bankers offer a better exchange rate, which can equate to an extra couple of $1,000s in the pockets of the students as opposed to anyone else. So in this case, you've got Chinese students needing, say, a collective $150,000 to cover living costs and tuition. Their parents out in China deal with the underground banker, and they're told to basically move that money from their Chinese bank accounts to Chinese bank accounts operated by the network. Once that's received, that cash is then given to the students, and they can then spend that. And the thing is that if we look at where that money came from, we'll see that that came from the drug trafficker the day before. So what we see is drugs money, criminal monies are being used to settle inward remittances for Chinese students. And we see this happens every day at every university in the UK. And I'm sure if you've got Chinese students happening, the same thing will happen with that. So you can see here, there's a number of different things. If you look at what the red arrows, they're basically to demonstrate the movement of value, which is, so there's not necessarily direct link. And of course, every one of these is a potential way of a commission that can earn money. So these professional networks do very well out of the monies they move. So that's about that for that slide.
Okay.
Yep.
Very helpful breakdown. Thanks, Brian. Are you okay? Now on to Daegu.
Yeah. I mentioned Daegu at the beginning. Daegu basically means to buy on behalf of. And if you've ever been to an airport, if you've ever been to a big department store and you've been around the high branded goods, you may well have seen Chinese people buying goods. Now, if you can imagine, so if somebody comes to, if a Chinese family comes to New York, you can imagine it's going to cost them a small fortune to bring the whole family there. So what some families do is they buy some high value goods, like Louis Vuitton is the brand of choice out in China. But there are plenty others out there, Hermes and Dior, Rolex. They'll buy some expensive branded goods and they'll take it back to China and sell it, and it helps. It helps the subsidize the trip. Now, although they're probably smuggling that into China and causing a problem for the Chinese authorities by not declaring it and paying the relevant duties, because the reason why these goods are so sought of in China is that China has a policy of restricting the amount of high value goods and branded goods that they allow into China, and equally they put high tariffs on them. Equally, as part of these big labels and branded goods, they've got a deliberate policy of restricting access to them to keep the value up. Only the right people can have the right label, sort of thing, but it means that they can maintain high prices for them. So because there's this high demand, there's a demand for this, and the Daegu phenomena has come up, and a lot of major branded goods have called it out and attacked it. And I think the last figure I saw was something like 93 billion globally is basically estimated to be feeding the illegal Daegu market. Now, in terms of so what, how does this affect and how does that impact on us? And why should we be concerned about this? The problem is not so much the people I've mentioned who are helping to subsidize a trip. As far as I'm concerned, I'm talking about the large networks, the multi-million and multi-billion dollar industries which have came about all around the world. And what they do is these networks buy branded goods in the millions, if not billions, every year. And the issue with it is where do they get this money from to pay it off? And basically, this comes from these Chinese underground bankers, these money laundering networks who are basically service the Daigou industry. So the Daigou basically need funds outside of China. They've obviously smuggled these goods back into China. They've obtained their monies there. They now need the dollars outside in the US, the euros in the Europe, sterling in UK to go buying it. And so they turn to these networks. Now, often with this as well, it's not necessarily that they're giving cash, criminal drugs cash to buy it. They often just pay off charge cards and credit cards. So we see this quite a lot in the UK, where basically criminal cash is used to pay off credit cards. Because if you think about it, with these high branded branded goods, it's not just anyone. Rolex don't want the likes of me walking in and buying one of their watches once they see I've got a $60 watch on my wrist. I'm not the customer they want. And it's a bit of homework for you. Next time you're going through the airport, go into the Rolex shop or any of the all of the other branded shops as well, and say, I want to buy that now, please. You'll get told no. You'll be asked. The best you'll get is they'll put you on a waiting list. So that's where. But these Daigou operators, they've got the goods, the looks. They've got everything they need. They're wearing the right watch on their wrist. They're wearing the Jimmy Choo shoes. They're wearing the finest They've got the finest Hermes handbags, and they can go shopping. A lot of students are recruited to do this. We've seen these criminal networks with up to 1,000 shoppers working for them, all buying high-value goods. And if you think about if you were a student, how would you like to go around the likes of Harrods and Selfridges and Harvey Nichols and go shopping all day just to give it back to these people? But what they're using is criminal proceeds. The next thing, which not only makes this even worse for us, is that what they then do is they then set up companies in the UK which reclaim the value-added tax, the sales tax, on these goods. They're not entitled to it. First of all, the goods are basically bought with criminal proceeds. We do not allow value-added tax to be repaid from using criminal proceeds. Also, the people who are not entitled for a number of technical reasons, including that it's third parties. These people are not actually entitled to anything. And our tax system is being systematically attacked. I can't give you any figures. We are still trying to establish and identify, but every criminal Daigou network that we suspected has been proved to be 100% fraudulently evading our tax. And it's not only happening in the UK, it'll be happening elsewhere as well. So that's the significance for us.
Wow. Thanks, Brian. Really helpful laydown. And wow, even though underground sounds simple, it's very complex, which leads to the next topic here. And a question actually came in on this. So, Catherine, we'll go to you. How can we help? What are the red flags and actions that financial institutions can take to help identify and respond to Chinese money laundering network risks?
So we did have this question a lot in the pre-registered questions. I mean, it's come up a couple of times in the Q&A as well. Just before I talk about the actions for financial institutions, I want to respond to Edel's question in the Q&A. So just to provide a little bit more detail, the US dollar funds in cash enter the financial system through deposits into things like ATMs. They're then moved by the broker networks, but they're actually paid out to the beneficiaries nominated by the Chinese nationals. So they don't stay permanently in money mule accounts. They actually get paid. So simple example would be, like a wealthy Chinese person or an official has a child studying in the United States. They deposit RMB into an account in China, and equivalent amount is then released to their child or to whoever they nominate in the United States. So it doesn't stay in the money mule accounts permanently. But as you point out, this does provide some opportunities to identify these activities. So cartel risk is not new. And what that means is that financial institutions should have measures in place already. What I will speak through are some specific considerations that relate to cartel and mirror transfer risks, but we wouldn't look at mirror transfers in isolation. We would look at them in the context of wider cartel and professional money laundering activities. So this slide is broader than just mirror transfers or just Chinese money laundering networks. The first step is to update and maintain the institutional risk assessment to make sure it addresses how the risks can manifest for that specific type of institution. So a retail bank, for example, should be looking at the risk of large or structured cash deposits at its branches or in its ATMs, as well as the movements of larger financial flows that could be consolidated illicit funds that are being moved around as part of these networks. If that institution is an MSB or a payment processor, these are transaction-focused businesses. They're not rather than banks. So a bank is account-focused or client relationship-focused, whereas an MSB or a payment processor is transaction-focused. And what we've seen for MSBs is that they are sometimes misused for the payments being made for precursor chemicals. So they're seeing or they're exposed to a slightly different aspect of this criminality. Crypto businesses, we're seeing stable coins used by cartels increasingly. So stable coins are less volatile than digital assets like Bitcoin, but Bitcoin is still used. We did have a question about crypto and how that's used by money laundering networks and cartels as well. So I can circle back to that in the Q&A if we have time. We also have a downloadable article on cartels and crypto. With all illicit finance risk assessments, institutions need to think about geographical and jurisdictional exposures, client sectors, products and services. So that is, those are the dimensions that should be considered when assessing Chinese money laundering network and cartel risks as well. The second step is to make sure controls and processes are well designed and continue to operate effectively as these risks evolve. So processes should already be in place for client due diligence, screening, transaction monitoring, investigations, and use of data analytics to identify unusual activity. Shell companies are used not just during cartel money laundering, but also for sanctions evasion, export control evasion, and laundering all different types of illicit activities. So zooming in on a specific case study of this, in 2024, Luis Reynaldo Ramirez was sentenced to 10 years in prison for laundering $16.5 million in narcotics proceeds for the Sinaloa cartel. That involved bulk cash being collected throughout the United States. It was deposited into shell company accounts. So these are business accounts held at American banks. There were 4 different American banks involved in that. And it was then funneled to Mexico to be used in trade-based money laundering. So this is an example of methodology other than mirror transfers. These shell companies were incorporated in Wyoming and they were purported to relate to metal salvage. So I'm highlighting that point just because we sometimes think about shell companies as being in other countries. Brian mentioned the use of shell companies in Hong Kong, but they can be incorporated in the United States as well. So that should form part of an institution's assessment and making sure that their controls and processes are identifying shell companies registered here and how they can be used in money laundering. And of course, these controls and processes should be reviewed and enhanced in response to new criminal typologies. So an institution that, once we understand the mirror transfer methodology, we know that cross-border wire transfers still may be used, still high risk, but there are other risks as well. So we shouldn't unduly focus on cross-border payments. The next action is to deliver role-specific training to staff, and this is to make sure that staff have the knowledge they require based on their part within a financial institution. So a few examples: branch staff should be trained to recognise signs that a customer may be acting as a money mule or trying to structure deposits to avoid regulatory reporting requirements. A compliance team that's designing and configuring automated controls should understand how chemical abstract numbers can be used in payment instructions. So a chemical abstract number uniquely identifies a specific chemical, including a fentanyl precursor chemical, and they are sometimes used in payment instructions to then they can be used to identify that this is a fentanyl associated transaction. So if you're a compliance team and you're designing your monitoring or your automated detection scenarios, understanding how these specific pieces of information can be used is really valuable. And of course, if you're a financial crime intelligence analyst or an investigator, then you need to understand how these typologies use like mirror transfers. I would not expect that a financial institution would be able to identify the two sides of a mirror transfer. It's very unlikely that they would see the China side unless they happen to be a global financial institution that operates in both jurisdictions, and they won't see the links via WeChat. So what they need to focus on is the pieces of this network that they can identify, because once you have visibility of one part of the network, then you can start to uncover the rest. Step 4 is to review regulatory guidance, threat assessments, and other information sources on trends, typologies, and red flags, and then take action. So some useful sources of information are US FinCEN, OFAC, the DEA's National Drug Threat Assessment, press releases by Treasury and Justice, looking into court documents, convictions, academic institutions, think tanks, and all kinds of other valuable resources. It's also useful to look at jurisdictions other than your own. So, for example, if we have US financial institutions, they could look at how mirror transfers are used in other jurisdictions. So the UK National Crime Agency conducted a really successful investigation called Operation Destabilize. That was into Russian money laundering networks in the UK. They also use mirror transfer methodologies. So looking at different jurisdictions can provide useful information as well. Compliance teams need to review these resources, incorporate them into policies, processes, organizational structures, and controls across all the lines of defense. So, for example, if an alert comes out with red flags in it, some of those red flags might be useful to include in automated controls, but other ones, they might not be sufficiently distinctive, so they might not be sufficiently closely associated with illicit activity to be part of an automated control, but they can be valuable during an investigation. And the final point is to engage in public-private partnerships and information sharing initiatives. Like that can be either bilateral or it can be part of formally established partnerships like GMLN.
Thank you, Catherine. And that last point gets to the last issue we wanted to cover before we get into some additional questions. Thank you for incorporating some of the questions into your answers so far. You've both been involved in public-private partnerships. I wanted to ask, do they have a role in achieving joint and effective responses to this threat of Chinese money laundering networks, cartels, and criminal finance?
Yes, they certainly do. Sorry. Yes, they certainly do. If it wasn't for the public-private partnerships, if it wasn't for working with the finance sector, the UK certainly wouldn't know as much as they know now about Chinese money laundering networks. They were integral to the first understanding the scale. They were integral in working to try and identify solutions to attack them, because one of the things we haven't mentioned about these Chinese money laundering networks, I've been looking at networks now for about 25 years, and these are the most efficient and most adaptive networks I've ever seen. And as soon as we in law enforcement make an interdiction, they learn and change and do something different tomorrow. So we're constantly playing catch up. So we have long gone past the days when we think we could arrest our way out of the situation. We need to work with the private sector, because not only do they have incredible capabilities, incredible amount of data, they also, what we've found is they've got the aptitude to basically to come up with something new that we haven't thought of yet and deal with it. So if I can give an example, one of the problems that we saw in the early days of investigating these networks was that there were multiple amounts of underground bankers who would be going around depositing hundreds of thousands at a time into the banks. And they were settling inward remittances. They were putting monies into mule accounts, which were being moved around. But these networks are being identified. One of the things the banks did by coming together themselves and not only sharing with us, but with sharing with each other, which was a real big step because of commercial concerns. They suddenly identified that one bank's risk was exactly the same in the other banks as well. And what they were doing by sharing information was not giving their competitors a commercial advantage. They were identified areas of common risk, and together they could work on that risk to stop it. So one of the things that happened in the UK was they stopped and banned third-party cash deposits. No longer could you pay cash into someone else's bank account. Immediately, this had an impact against the Chinese underground banking networks and other forms of criminality and fraud. Obviously, the networks adapted, but the banks have continually stayed at the cutting edge to basically deal with it. I know I've worked with a number of public-private partnerships. I first met Catherine on one many moons ago, looking at modern slavery and human trafficking. But I was also very privileged to work with the private sector in the UK on one looking at East Asian underground banking. And we would feed live intelligence into them. They would go away and they would come back to us. I can say that network definitely identified networks we were totally unaware of. And together we could work out where law enforcement would take the traditional judicial routes of prosecution and seize and cash, but equally we could share information and the banks could de-risk and minimize their exposure to the criminal activity. So definitely way forward. We wondered what we've been doing for the last century, but we haven't been working together as closely.
That's great to hear. And I don't know, Catherine, if you want to add anything from a financial institution participant perspective before we get into a couple other questions.
No, I will add just a couple of comments. Obviously, public-private partnerships have been a real focus throughout recent roles. But I think the best word to use is the one that you used, Danny, which is joint action, because I think that public-private partnerships between financial institutions and law enforcement are very well established. They've been very successful. We heard from Brian and we saw on the slide some of the successes that Gimlet has achieved as an example. I think it's really positive to see the extension of those partnerships or that joint action to technology companies, telecommunications and social media, because for these complex types of threats and illicit actors, it's not just financial institutions and law enforcement that are part of the solution. I think there's a potential to expand these joint actions even further. Chinese money laundering networks and cartels are non-state actors, and they're really closely linked with conflict in many countries. They destabilize economies. They create vulnerabilities by disrupting education, by making people vulnerable to trafficking. The diversion of funds, can create conditions of poverty for some people, and these all provide footholds for criminality. So I think I think some of the tools of economic statecraft, like sanctions, can have unintended second-order effects, like de-risking or debanking. That financial exclusion drives financial activity towards informal value transfer networks, like Chinese money laundering networks, and these are opaque financial flows where law enforcement and financial institutions don't have visibility. They can't detect those activities, and they're funding criminality. So I think there's potential to expand these type of joint actions more widely, maybe to defense, between defense and financial institutions, or between other non-traditional partnerships. Now, I think financial institutions can have a really key role in supporting some of those initiatives. So I'll leave that there, Danny.
No, thank you. And for those of you, the Gimlet is an incredible example. And then for those of you in the U.S., you've probably heard of the FinCEN exchange, but I know FinCEN has been very active in its public-private partnership, especially focusing on some of the administration's top priorities, like cartel financing. So if you haven't been engaged with FinCEN exchange, look that up. Getting back to other audience questions, and Catherine, you mentioned this, and maybe circling back to it. Someone asked, what trends are you seeing for Chinese money laundering networks usage of cryptocurrency, and what percentage of their revenue do you think it comprises?
I think I get asked this question a lot about what percentage of these illicit activities is crypto, or what percent is cash. I would love to have an answer to that question. I think the nature of illicit flows is that the objective of those involved is to hide those illicit flows. So any estimates are very broad, but a data point that may illuminate this a little is the DEA seizures that we mentioned. So 2.5 million or 2.5 billion in crypto was seized versus 2.2 billion in currency, and that's over 2020 to 2024. So that suggests that crypto is actually a really critical and potentially outpacing the use of cash in some of these cartel activities. So cartels have integrated crypto into their operations, like throughout the kind of product life cycle. It's an accepted method of payment for buying precursor chemicals and narcotics production materials. So 97% of Chinese precursor manufacturers accept payment in crypto. That's primarily Bitcoin, but it's also Tether on the Tron blockchain and Tether on the Ethereum blockchain. And that's because Tether is a stable coin. Its value is linked to the US dollar, so it doesn't experience the volatility that Bitcoin does. So that's the start of that product life cycle, the purchase of the chemicals. After the narcotics are manufactured and distributed, a lot of the payments are in cash, as we've already spoken about. Some of them are converted into crypto during laundering. Some are purchased directly in crypto off a darknet market. Primarily, this uses Bitcoin and, again, Tether, but they also use USD Coin, Ripple, and Ether as well. I'll give one specific example of this. So in January 2024, Martin Mizrahi was convicted of laundering more than $4 million in proceeds of illegal narcotics and fraud, and $8 million in bank account and credit card fraud. So he accepted bulk cash, which was the proceeds of these illicit activities. He converted it into Bitcoin. He moved it through multiple crypto wallets. And this indicates the intersection between different types of criminality. So this was not just narcotics proceeds. It was actually the proceeds of business email compromise and other types of fraud. And then at the end of the cycle, funds can be cashed out using crypto ATMs or other methods like fiat currency. We do have a downloadable article. It's in the document that's in our website on crypto and how cartels use it. I'm sure Danny is going to mention this. I'm very conscious that we had lots of questions in the Q&A in this session and lots of questions that were submitted beforehand. So I'm not sure if we'll get to too many, but we can definitely take those as inputs into subsequent webinars or post responses to them as a video or as an article as well. But Danny, you might have a couple of other questions that you want to raise before time runs out.
It's always the case. Against the clock, I was going to mention the same thing, and I think we probably have time for one more question or a couple, maybe a couple quick ones. There's a question about, is it easier for cartels to use the Chinese money laundering networks than the USA or other non-Chinese money laundering networks due to lack of regulation?
So I don't think it's about regulation. I think it's about environmental factors. So countries that, if we think about the driver side of it, so the Chinese capital flight side of it, they're looking for economically stable and secure destinations for their investment, locations that are appealing for their children to study and maybe for that person to live in future. For the money laundering network, having an established diaspora to use as money mules, as Brian mentioned, is an enabling factor. And from the cartel side, having large volumes of cash and potentially physical proximity to countries where cartel operates, that's where the supply and demand match up. So I don't think it's about regulation. I think it's just about those environmental conditions. And financial institutions, it's worth mentioning, are picking these things up. They are identifying it. They are reporting it. So a lot of this is working. The action is to make sure that those measures continue to be effective and can be enhanced as the threats continue to change.
Okay. And I see we have less than a minute left, so I better close this out, but I'll just ask Catherine and Brian, is there any other 20-second points you're dying to make on this topic before I close things out? No.
Nothing for me.
Okay.
Thank you.
Yeah, well, you gave us enough. So this brings us to the end of today's webinar. Before you jump, I have some exciting news about our next webinar. But before I mention that, first I want to thank you, Brian and Catherine, so much for your insights and expertise, and also for the important work that you've done throughout your careers to protect the integrity of the financial system. And of course, thank you to all of the attendees for joining us today. Our next webinar is going to be on September 10th, and it's going to be on fentanyl-specific related money laundering, and it's going to feature a senior special agent from Homeland Security Investigations and a senior manager from an FIU of one of the largest MSBs in the world. Among other things, they're going to share best practices and tips for detecting, illuminating, and disrupting fentanyl and cartel-related money laundering, and you won't want to miss it. So we've included a link to that registration in the chat, and we'll also include it in the follow-up email and on our website and LinkedIn page. Have a great day. We look forward to connecting with you all again soon.